Good evening, everybody, and welcome to today's weekly analysis. Today is the 5th of January 2025. So we're just going to have a run through of what we're going to be expecting from the dollar index, maybe just throughout this year. So what I mean is we're simply going to be looking at the yearly time frame since we're now in a new year. So we're probably going to see how the last year candle traded and then what to actually expect. All right. So this is the 12 months time frame. See how we closed, and just the fact we closed above this candle signifies higher prices. Remember, I used to tell you that candles are simply structures, right? What I simply mean is that if you have a candle like this, all right, if this is a bullish candle on the lower time frame, we are having a clear uptrend, right? Now, if this candle had closed above another candle, it simply means that we have a clear break of structure on price closing above. It is not like a rejection where price takes a high and then rejects back and then close below. That's like kind of like price is running, taking out liquidity. But if it closes above that, it's a clear break of structure, all right? So this alone here implies price is actually in an uptrend. If we just look at this 2 years, maybe on the monthly or weekly time frame, we're going to have a strong uptrend at this point. So this basically means maybe just look at the 12 month time frame, we might say one price will come right up to this high, but which that will be too much, right? But with this, it simply just means we might be having higher prices. Why I'm saying only a little higher prices, because we have this on the yearly time frame. So we can play around here and then we maybe trade back down to this fair value gap. Okay, and if we could have not closed above this candle, maybe we want to take the candle as a CRT to come back to this point, right? So let's see from there, if we go down to probably 6 months time frame, let's look at the 6 months. Okay, 6 months time frame, actually the same thing. We had fair value gap, filled internal range to external range liquidity. So this literally means that this high will likely be taken out, right? Internal to external range liquidity likely going to be taken out. So let's leave from there to let's say 3 months time frame. Let's look at the 3 months. All right, so also looking at the 3 months time frame, you can see that we had a very good order block here. Our pricing of this candle after filling this fair value gap. This alone is a sign for higher prices for this guy. And then trying to refine the yearly order block, we can bring it up to this candle here. All right. We can now bring it up to this candle. Probably if we're taking this high, we're tapping into that and then we'll continue back lower. So this means we might not actually be taking out this high because this area, this entire zone here is an order block from this is another block on the 1 year time frame. So if price is coming right up to this point, it doesn't literally mean that it's invalidating the other block. Maybe we'll just take out this high, taking this low to high to be an inducement. And from here, we start going back down. And I think that's possible because of the current happenings in the US. All right. So we have this other block on the 3 months time frame. Let's go down to the monthly. All right. To the monthly time frame, we have this high. So this high likely is actually a breaker. All right. This is actually a breaker block right here because it took out this low. This low was taken out, which is the low that created this high. So we're having a breaker block, which is another block on the 3 months time frame, right? So, and then it also has a fair value gap within that area. So let's go down now to the weekly time frame and see what we have. Now, things become interesting. Looking at the weekly time frame, we see that price went above that area of the breaker and it has already reacted back to it, and the weekly has filled this fair value gap we had here. All right, so which means the buy that we are having from this point was even coming from a higher time frame, which was the monthly breaker, right? So we had that move from there to the upside, and then weekly has formed this other block for us. So looking at this point, probably we might have a push back down to this other block. We may have a push back to this weekly other block, which also has to do with this fair value gap, all right, which has to do with that fair value gap. And from there, we can continue back higher. So Looking at the weekly time frame with our closest target, we can have this candle right here to trade up to. Let's look at the daily. Looking at the daily time frame, we have this is the main reason where we had the sell on Friday. Price traded into this other block right here, this mitigation block, and then we started having we had a rejection for the Friday. And now if you look above this other block, you see that we have this fair value gap right here. All right, so we have this fair value gap on the daily time frame, so which means this can likely be used just like an inducement to come up to that fair value gap. Remember, we have, even looking at this point, this is like kind of like this is the high we expect to be taken out, all right, into the other block. So this is liquidity. So just looking at what we have at hand and then trying to forecast it based on us being day traders. We have this was the other block, the mitigation block I just pointed out, where price tapped and then we having that rejection, all right? And then price also came back down to this fair value gap, internal to external. So this week we can assume price coming back down to this point, and from this other block, we can continue right on back to that fair value gap. So we might have something like this into this other block, and then we have prices trade around this area, and then we come up to the fair value gap above, right? So we expect this uptrend to continue. Like you can see, I mentioned this uptrend on the higher time frame. I mean, on the yearly time frame, how price was, the fact that we closed above the previous yearly candle made it a clean order block, right? So as of now, this is what we're expecting. And maybe if we just want to have a little lower prices to take out this low as an inducement, we'll fully tap into now to the weekly fair value gap, which is standing below this point. And it's still possible. Maybe this week we can open and then price trades immediately back down to this fair value gap, retesting this weekly order block, and then from there we start seeing higher prices. I think that will even be much better, right? Then the prices to continue rising from here. But also, why I'm looking at this to be the second scenario is because we had a massive close above this candle, so which means a lot of momentum to the upside. But at the same time, we have hit a key level that we can expect a little correction, which is the daily mitigation block that was sitting right here. So this is it. This is the daily mitigation block. So because of that key level, that mitigation block, we can have a little pullback, which might even come down to take out this low, which means this low might end up to be just an inducement, low into this fair value gap of the weekly time frame. Okay, and then from there, now we can even maybe use this candle now as a CRT, which means we can take the CRT low into the weekly fair value gap, and from there we have price pushing back higher. So we have two scenarios for DXY on the daily time frame. Either price buys from this other block, all right, either we have a buy from that other block, or price comes down to the weekly fair value gap right here. Okay, so we have a buy from here, or price takes this low and then it gives us a buy from this point. All right, so this price did not take out this previous weekly this high, so which means maybe Monday we might open, take the high before we come back down, or we just open trade lower, then maybe coming right down to this point. But all I'm trying to do now is, or what I'm trying to do now is that we're going to be patient to see how Monday is going to trade, because the fact that price is closing within a candle like this shows a consolidation period. All right, when you have an inside bar, it shows price is actually consolidating. So we are not having an expansion yet. So we have to wait to see if the expansion happens to the downside, then we can start looking for buying opportunities. If it happens to the upside, maybe you could now start looking for sell opportunities to have a correction, deeper correction, right? So that's basically it for the dollar index. Okay, so let's try to put in Euro USD to this, and then we'll see how it's going to look like. So Euro USD, let's look at it also from the 12 months time frame, and then we'll see what actually happened. So same scenario, price close below this candle's low. We also have the weekly order, yearly order block right here, which price traded down to it in 2022. Then 2023 was an inside bar. 2023 4 started expanding lower. So we go down to, let's go straight to 3 months. All right, 3 months, same thing, how price close as well. And if we try to refine this, we will probably have something like this. And then, yeah. Okay, so let's go straight to the monthly time frame now and see what we have. Okay, looking at it on the monthly time frame, we still have lots of price action here, fair value gaps, and so on, even these breakers and so on. So, all right. But then we have this fair value gap, and price has touched this last. It hasn't yet. So, but we have this monthly fair value gap right here, which also has to be this breaker. Same thing with same thing we saw on the dollar index. We go down to the weekly time frame. So weekly, we're having a rejection here. And one thing actually last week that made me not to trade, and I think was on Friday, was because I was expecting price to take out this low. So we have straight equal lows right here. Straight ones, price did not take out a low, and it rejected a lot more higher. So if we're expecting lower prices again from the dollar index, then we will expect more higher prices for Euro USD. Okay, remember this other block here, this one, okay, is the same first order block that we have for DXY for Euro USD, and then the fair value gap that we had for. Let me look at this one. So DXY had a fair value gap, and it was filled, and it wasn't filled, but that of Euro USD price filled it already. So this is this is making things interesting. This fair value gap has been filled already, but on DXY wasn't. That was an SMT movement. This alone was showing that DXY has a lot of strength and it has to continue higher. So when this guy filled this and continue lower, this was just stop point and so for more lower prices. So just looking at Euro USD, I want to expect this to be the best option for us to have our sales coming in. Okay, maybe we'll take out this candle's high, and then we come lower to take out the equal lows that we had right here. Okay, so we can consider this candle a CRT if price want to trade into this other block and then taking this candle's high, maybe Monday or Tuesday, and then we come back for the low. That will be very, very good. And I think it will be pretty much the same thing for this guy right here. We take out this low, trading within this other block, and then we continue higher, something like this. I think if this happens, it will be, if it gives us confirmations after taking this lows and this high, we'll have we'll have a clear price action to trade, okay? So let's look at GBP USD. I think the same thing. Let's look at this from the weekly time frame. All right, so GBP USD, we are now targeting this low. With the close of this candle, price is likely going to be taking out this low. Going down to the daily time frame, we had price reacting from this other block right here. Okay, so based on the fact that we're expecting more higher prices and more lower prices for Euro USD, this guy will not be an exception. Okay, so we can also expect the same thing. I think it's more logical now as we have another block here. We can also expect price to move a little bit higher before the drop continues as a reaction to this other block we have right here. So a little higher prices for GBP USD before the down push, before price continue lower to take out this sell side liquidity. Let's look at gold. All right, so gold. Just remove all my drawings. So gold, let's look at 12 months for gold. We close heavily bullish, and I think previous yearly high should be the next target. Let's look at 3 months. Oh, just 1 month, 3 months. I want us to look at the 3 months time frame. Okay, so 3 months time frame, we having something very interesting here. We have a fair value gap and the way price close here. I know a lot of us want to expect this to be a CRT. Okay. Now, when price is trading somewhere like this, where we don't have a clear area of interest, it makes our CRT to be low probability because you will not just be expecting price take a high and then come back, take a low, like that would have been literally what you're expecting. But the fact that we took out this high, came back and closed below it on the 3 months time frame means there's more probability for price to at least fill this fair value gap, right? To at least fill this fair value gap before we continue, if we're to continue higher. So looking at this, and then on the monthly time frame, we've had lots of rejections from this fair value gap on the monthly time frame. Remember, this is 3 months fair value gap, 3 months FVG. Let's put that. That's our 3 months FVG. Okay, so 3 months FVG, 1 month FVG. So we haven't closed below this candle slow on the 1 month. That has not validated this to be a strong reversal signal yet. But then it is, let's look at the weekly for now. Okay, so same thing with the weekly time frame. We are really tied up in a consolidation. Price is consolidating around this area. And we are likely going to have price trade down to the monthly time frame. So the 3 months fair value gap we just spotted. But then this is a strong bullish trend for gold. It's more like price can just expand higher from here. Okay. Because the only reason why we're expecting lower prices, it's not based on the fact that the 3 months is forming a CRT, because we don't have a key level, and around this area there's no round figure. If this was a $3,000 area for gold, it might have made sense to be a CRT. Maybe gold leaves from here and then it just trades right up to where we have 3,000. Okay, so there was no round figure here for us to consider. Maybe it's a whole a sentimental key level, not yet. So gold is really in a tight situation. We will not really anyway, let's look at this. We had price taking out this high and then closing below the low that took out that high. So this alone, looking at market structure, is basically telling us that we might be having a sell. And then price traded back up to this internal range liquidity, and we came back to close lower. So just from price action movements from this point, we can expect that, okay, there's a likelihood for price to come down and then fill this to take out this low, which is the 3 months fair value gap. So, which means that we can have price from here trade lower to fill this fair value gap before we continue higher. That's just an expectation. Okay. So, but then for us to confirm this move coming down to fill this fair value gap, I want to see price close below this candle. If it close below this candle, it validates it to be a resistance, and then we'll likely have price trade down to this point. But if that doesn't happen, anyway, let's just put this, that this is our buy invalidation. This is our buy invalidation. If price takes this low, then we are not supposed to be buying anymore. Okay. So if price takes out this low, we are definitely going to take this low. So which means if price trades below this low, we should hold sales right down to taking out this low. And also, if it closes below this low, this candle, there's a possibility it's going to be taking out this low. So that's just to put things, putting things together to have a clearer view. But remember, we are actually in a tight position. Price is trading within a swing point. This is the swing low. This is the swing low that we have, and then this is the swing high, the swing low. So all this is happening within this area, and then it can end up to be all this can end up to be an accumulation. Can end up to be an accumulation, and then at the end of the day, we have a manipulation lower and then a continuation higher. So who knows, until you see the manipulation leg, you will not be sure that it was an AMD. So that's for gold. Let's look at Bitcoin. Now, looking at Bitcoin as well, with the recent happenings on the crypto space, Donald Trump and so on, we expect a spike up. So because of Donald Trump is going to be inaugurated as president on the 20th, right? Is it on the 20th? Let me see on the chat box. If it's on the 20th, then we're going to be having a spike towards that. You all know how he's into crypto, and because he's a big influential person, the crypto market is going to be pushing higher. So, all right, it's the 20th. Good. So we expect higher prices for Bitcoin, maybe throughout this season till he gets an election, or still price can manipulate before the real day of the election, which will now just push prices up crazily. All right. So last month close contraction. Remember, same thing. We cannot just assume it to be a CRT and then expecting price to take out this low. We don't have a basic key level, though price traded up to the 100,000 key level. Still a possibility for it to be a key level, but then when you're in a bull run, it's not always good to start expecting a quick reversal as such, right? So it's just the same thing like here, price might have traded up to this point, then you start saying that, okay, this candle should be a CRT, and the next day price just starts moving higher. So this is more fundamentals as well. So price can likely move higher to take out that high. Let's go to the weekly. So weekly time frame, we have a fair value gap right here. Okay. Price hasn't filled it yet, and it has built a lot of liquidity towards that. So that's why I said there's a possibility that, Bitcoin can move crazily within just a period of very short period of time. You can see this day was Thursday. Bitcoin traded up to 100,000, 104,000, and then it came back down to 90,000 in a single day. So there's a lot of movements that can happen on Bitcoin just within a day or so. So we have this weekly fair value gap here. Price has built a lot of liquidity around this area. Okay, we build a lot of liquidity around that area, and then price is playing around this other block here. So we have this fair value gap as well. Now we have two things to expect. If price trades up to this key level before the 20th, there's a possibility price can start selling. And then when on the 20th and so, price will start running higher. Okay. But if we play around this area till the 20th, from here, we're just going to have a push up. It is possible that we can have a spike up and then price comes down, or we can have a spike down and price moves higher. But all is that we are actually bullish. Just the price has engineered a lot of liquidity at this point. And this buy here, we don't have a concrete key level to, I mean, the key level we're getting these buys from now, we will not say that it is a high probability because price has retested this other block for quite some time now. So the fact that we are just coming back to it is reducing the strength of the other block. All right. So this liquidity at this point, let's see something like this. We have this fair value gap here. So maybe we'll push back down to this fair value gap here. We can have some buy continuations on the daily time frame to take out this high. Okay. This fair value gap as well. All right, please. That's it for BTC. More higher prices, more higher prices, more higher prices. But then price have this liquidity here that is likely to be taken out. So we have to be aware of that. Okay. If there was no fundamentals that might have to support Bitcoin to push higher, like the US elections, we might have been expecting lower prices. Like we'll really be expecting lower prices, but the elections is making us to expect higher, higher prices. Somebody said we should go to the 4-hour time frame. Yeah. This is a daily fair value gap, refining it to this 4-hour breaker. We're actually consolidating. So you have to be still. Any trades you're taking around this area, maybe you don't know what you're doing. Price is consolidating. You have to let the expansion happen, whether it's a manipulation before you start expecting to take your trades. All right. So that's it. Let's look at US 100. 3 months time frame. We close bullish as well. US 100 heading up 1 month time frame. So basically, a lot of assets like indices have been closing like this. So there's a possibility of a pullback. We have this fair value gap right here. This is the monthly time frame. So go to the weekly. Weekly close below this low. So I expect lower prices to come down to the monthly fair value gap, at least down here. But this week, traded back up to close above. So let's look at how the daily looks like. All right, so now on the daily time frame, we have this other block. So there's a possibility price trades up to this other block, then we move lower, maybe even right down to taking out this low before we have more higher prices. Okay. We have this other block, which has to do with this fair value gap here. So, but then we can just take out this low because this is the monthly fair value gap, and from there we continue higher. But still, this is what I'm expecting. Price come to this other block, and then we have some sales. That's US 100, US 30. We are in price consolidating on this other block, and expecting higher prices, maybe into this fair value gap. It has to do with this proper order block here, this breaker. This is a breaker on the daily time frame area. So this area here. Okay. All right, so we have this fair value gap. So we can have price push up to that area, maybe even more before we have push back to the downside. And maybe just a continuation higher. There's still a possibility that we can just continue buying from here. From this other block, we just push higher, straight up, right? It's a possibility because if the bull market is happening, there's a possibility that this will just continue. Let's quickly look at JPY index and then you can put that into. So JPY index was still playing around this area, and then we have this fair value gap we're expecting price to trade down to. Okay, and then we can have maybe higher prices from there. So that's for GBP, JPY. Okay. I think I've answered almost every question. I think I've answered all your questions. We're out of time, so I'm going to still be sending in more analysis during the week. All right, so we'll have to see how Monday trades, so that when I'm updating the group, I'll have more information to give you guys. All right, so thank you all for making our time to join this weekly analysis. It's the first weekly analysis we're having for this year. And B. Lamba is present, Castrol is present, Bazifon, Glacius Chia, we have Remora, we have Chejari, we have Yannick Tabi, Idel Queen. We have looked at US 30, we have the Queen, we have iPhone, I think that's Mavia, we have Tita, Jerry, Coffee, Macrael, we have Mitch, Nesta, Nelstar. We have Stangala, we have Ngala Brian, we have Joan Delphine, we have Tom Collins, PC Slava, Hidlin Bay, Mr. Wayne, and we have the Zoom user. All right, wish you all the best throughout this week. Know that trading is not just about the charts, it's about you. It's about you as a person, your habits, whether you're disciplined or you're not, it's going to affect, it's going to reflect on your trading, right? Now, you make money in trading based on who you have become, all right? Let me say that again. As a trader, you make money based on who you have become. So if you don't become like a profitable trader, maybe with your habits, you will not be profitable or you will not make money. All right. It's not gambling where you expect maybe to just wake up one morning and you're making a lot of money. No, it's not, it doesn't happen like that. So you have to have the habits of a professional trader before you expect to be profitable. All right. Those habits are very, very important. If you don't have those habits, forget it. You might have one win, two losses, one win, two losses, or you have 10 wins. One loss will just wipe everything out. You will not be consistent until you develop the habit of a profitable trader. You will not be consistent. All right. So it is just like that. Normally, you attract success in everything that you do, and you attract it by becoming that kind of person that success will want to hang around with. Success don't hang around with lazy people or people that are just banger smokers, and so on. So you attract success by who you have become. So success is a very jealous person. He doesn't hang around stupid people, people that are lazy, people that are not serious about life. So that's it. If success in trading will hang around the real people, right? So make it uh, make it your goal this year to develop the habits of professional traders, develop the habits of a profitable trader, and you attract profitability. You attract it. It will just naturally flow into you. You will be surprised. Okay. All right. That will be all for today. Thank you guys so much for joining. I wish you the best and good night.